Hi, we are discussing the chart of VOLTAS in this Let's Get Technical series. Today on this daily chart of VOLTAS, as you can see, I have already marked the RSI positive divergence. RSI positive divergence basically is a very early indication of a potential momentum shift in a stock. On the daily chart, we can see RSI positive divergence has been formed because the RSI has formed a higher low, but the price is still forming lower low. Now on the daily chart, as we can see, not much upside has taken place. So let's go one time frame lower to see what is happening. On this 75-minute chart also, we see that a similar RSI positive divergence was seen approximately in the mid to end of November and at the low of approximately 800 to 806. Now after this low was formed, the VOLTAS chart prices have tried to turn up again, but the resistance from 200-day moving average has posed a hindrance two times. At the same time, on the RSI, we can see that VOLTAS also took resistance at the level of 60, but on both RSI and the price, there was a lower high in formation. So I don't think it is a very big threat. Let's move one more level lower to the 15-minute chart of VOLTAS. On this 15 minutes chart, there are some very interesting indications and some very interesting observations that I wish to share with you. On this VOLTAS chart, as you can see, again, there was a positive divergence indeed. Now, firstly, triple positive divergence across different time frames is a very positive indication. It's a term called eclipsing. And this indicates that, when a lot of different time frames are showing a similar kind of pattern, then it really increases the strength of that particular pattern. So this particular stock has moved up approximately 7%, which is, to be honest, not a very big up move. So that indicates firstly that there is a lot of upside still left on the stock. So what do we do now? And is this particular resistance, which is coming on the 75-minute chart from the 200 EMA, going to sustain? Do we have more potential upside left, or is the stock going to continue to make new lows? Let's see if the 15-minute chart is giving us some indications. Now, I don't know if you know, but there is a phenomena called range shift. On this 15-minute chart, if you look very closely, on the last three dips, RSI has taken resistance above us, taken support above the level of 30, which means when the price dipped and made lows, the RSI did not go below the level of 30. This is a good indication because in a bull trend, the support level for RSI for any stock is the level of 30. Whereas if a stock is in a bear trend, then when the stock continues to fall and make new lows or even intermittent lows, then the RSI keeps puncturing the level of 30. As you can see, before this low of 806 was formed, every time VOLTAS stock kept going lower, RSI was successfully puncturing the level of 30. But because that has stopped to happen now, we will say that RSI on the 15-minute chart is experiencing the phenomena of range shift. This is a strong indication, and this gives us some motivation to go ahead and make a position in the stock. So when we want to make a position in the stock, we have two questions that we need to answer. One is, where are we going to exit if the stock falls from where we are right now? And when are we going to exit if the stock goes up from where we are right now? So we are at the level of 836 approximately. If the stock VOLTAS goes down from here, then the last low of the stock, which is approximately at the level of 806, is where our stop loss should be. Now, because we cannot match exactly that particular low, what we're going to do is we're going to place our stop loss a little bit lower, say at the level of 795, which means then that our stop loss would be of approximately 5%. But then what about the target? To set the target, let's go at the daily chart and see if there is a strong resistance. We can see there is a point of convergence of the 200-day EMA and the 500 EMA, which is the gray line and the blue line. So we are going to take this as a potential target level. This is just below the previous high of the VOLTAS chart on the daily VOLTAS stock on the daily chart. So basically our target would be for the level of 982, our stop loss would be for 795. So from the current level of 836 approximately, our stop loss would be of 5%, our target would be of around 17%. That now gives us a risk reward ratio of more than 3, which means this stock is making the cutoff for us to make a position. Now, because we are disciplined traders, we always maintain the stop loss of above 3 for any trade to take position. For any trade setup to qualify in our books, it has to give us a risk reward ratio of minimum 3. That is why Voltus makes the cutoff and makes a good candidate to take a position with the risk reward of 3. Basically, we are looking for a reward of at least 3 rupees on every rupee of risk that we take on a stock. I hope you liked this analysis. If you did, don't forget to give a thumbs up, leave your comments, subscribe to the channel. I'll see you again next week with a new stock and a new analysis.